we continue to focus in on earnings. HPCL is a counter in focus on account of earnings. And in fact, this is a company that has seen a bit of a mixed Q2 with GRMs taking a hit. We've got Mr. M.K. Surana, who's joining in, the Chairman and Managing Director of HPCL. Thank you so much, Mr. Surana, for taking the time. Clearly, a quarter that witnessed quite a few disruptions in terms of shutdowns. What are the trends that you're witnessing on the GRM front, and what are the reason for the sequential decline in GRMs?
Our Q2 GRM was $2.44 and the first half, H1 of 21-22 was $2.87. So H1 2.87 was better than last year H1, which was around $2.58. One of the reasons for GRM being low, in spite of the cracks being high, was because, as you are aware, our Mumbai refinery was in shutdown for the major revamp and the expansion project job. As you're aware, Mumbai refinery expansion has got few new units, few revamped units. So we did one of very complex and major revamp during the first half of this year. Of course, it got coincided with Corona second wave. Now, the good part was that so we could do and take the shutdown at a time when the margins were low and the demand was also low. But at the same time, it also had a little bit of a spillover because there was some restriction on oxygen used for industrial purposes, etc. But we have completed that. So because of the shutdown, and also because one of the crude distillation unit in Vizag had a fire, and that was also required to be repair and maintenance work was to be done. So we had a lower throughput and higher fuel and loss because startup, shutdown, stabilization needs a little bit of disturbances, and that created a higher fuel and loss, because of which the GRMs are low.
All right. Also trying to get a sense of the trends that you're witnessing in the marketing margins. How do you see the performance going forward?
See, we were not in a practice of providing the marketing margins as such. There are two things. One, because the faster pickup in the demand and the slower pickup in the supply because of various reasons. One being the restricted supply from OPEC plus countries and the hurricane in Gulf of Mexico called Ida. So there are also some disruption in a pipeline in Libya. So there was a jump in the crude prices, and the crude prices were maintaining high. Parallelly, the product cracks were also high. So definitely the end pump prices had been keeping high. We are trying to ensure that we are able to supply the fuel to the end consumers at the most reasonable prices. At the same time, aligning it to the international market.
Good morning, Mr. Surana. This is Cheryl also joining in the conversation. Before I go on with my question, a very happy Diwali to you and your family. Let me talk about the volumes. How have the volumes picked up, given that we are seeing recovery now, as we are seeing parts of the country actually reopen? Most part of the country is actually reopened as the COVID-19 fears have abated. Do you see any reasons going ahead for demand worry, given that we are seeing a pickup in the pace for EVs as well?
So as far as demand is concerned, you're right. The demand has picked up very smartly. For example, if you see the October month, the petrol was up 5.83% month on month, means compared to September 21. Even diesel was up around 1.27%. 20%. Month on month, diesel was up 20%. And the ATF was up 15.87%. If you see compared to pre-pandemic time, that is October 2019, petrol was up 8.17%, diesel was up 1.27%, ATF was up 6.58%. So there is a smart recovery in all the major products. And that is visible if you go outside on the airports, on the roads, on the shops. So the demand is coming up without any doubt, and that.
All right, Mr. Surana, we leave it at that. Thank you for joining us on ET Now and giving us a take about the earnings and the way forward. That was Mr. M.K. Surana of HPCL. On that note, we slip into a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side. Don't go anywhere.